6 Rules of Personal Finance and Budgeting for 2022. In this video, we are going to show you the 6 rules of personal finance and budgeting that you can live by. In my opinion, there is no such thing as a one-size-fits-all method. It all relies on your specific circumstances, financial condition, preferences, financial philosophy, and so on. So first and foremost, I believe it's critical to accept personal finance advice with a pinch of salt. Second, like with other self-development advice, learning more about managing money should be pursued in a guilt-free setting. Everybody, makes mistakes sometimes. If you find yourself in financial difficulties, know that you're not alone and that we're all learning together. Now, before we get into the juicy details, I'd like to add a little disclaimer. I may have experience in finance, but I am not in any way a financial expert. I only deliver knowledge in a fun, exciting, and informative way. So, if your money is on a serious decline, I strongly suggest that you go see a financial advisor. Fast track your wealth and get more life-changing, mindset-shifting, and great content regularly. Only here at Wealthmatic. If you're new here, don't forget to subscribe for more money content by clicking the icon below. Okay, so if you're just getting started with financial planning, there are 3 tasks that you should focus on: creating an emergency fund, budgeting and tracking your costs, and being organized. Let's begin by discussing the emergency fund. Expenses should be spread out over 3 to 6 months because life is unpredictable and you'll always need your emergency savings. And there are also occasionally enormous and unexpected bills that can surely knock you off your feet. According to many personal finance experts, emergency money must be your priority if you're just getting started. You should also keep your emergency fund well filled at all times. That implies that if you need to spend your cash for some reason, all of your other savings priorities should be set aside to replenish your emergency fund. Next, budgeting and tracking are necessary to attain our habits, which we should begin building and adopting as soon as possible. If you're unsure whenever your cash is spent, I recommend keeping track of your costs regularly. At first glance, this may appear to be entirely pointless, because you're probably just duplicating your spending from your bank statements or manually putting where you spent your pocket money. Tracking your expenses, though, is more than just adding up numbers. It's like detecting your spending habits. You'll eventually learn how frequently you spend your money and whether or not you can save money. Believe me when I say that most of you will be surprised when you begin doing this. Getting into the habit of monitoring your costs every day on a basic Excel or Google spreadsheet application is a great method to make sure you're doing it without the stress of having to do it monthly or weekly, because those figures surely add up quickly. I keep track of my costs regularly and use Google spreadsheets because I can access them from anywhere without having to worry about the file's integrity. Now, don't just list spending when it comes to expense tracking. Going one step farther in your financial research can make a significant difference in the long run. For example, make sure you're classifying your costs so it can delve in and see what classifications are representing the largest slice of your spending plan at a glance, and set reminders to indicate which costs were unnecessary, which you would like to prevent in the future, and which expenses you may reduce or eliminate. Also, instead of passively noting your expenses, use this opportunity to ask questions. Questions such as, can I live without it? Do I really need it? Is it something I can afford? Is it possible to reduce or eliminate this expense? These questions will assist you in gradually lowering your spending. Similar to other aspects of your life, personal finance may also be a deliberate process that helps you focus in terms of income management. In this example, what you value in life and what you need to get back on course with is personal finance. You can play with or perhaps implement some fascinating spending rules of thumb if they sound right for you and your circumstance. The 50-30-20 rule. This is a well-known basic budgeting rule that indicates that you should spend 50% of your income on needs, like housing and bills, 30% on personal expenses, and 20% on financial objectives, such as debt or retirement savings. Another version of this is the 70-20-10 rule, which advocates saving 70% of your net salary for living expenses, 20% for net salary savings, and 10% for debt payments. In this instance, it's better to pay off the most pressing debt first, then concentrate on repaying off the rest as rapidly as possible. The first rule suggests that regardless of just how much you work, you must concentrate on how you will spend your money. You must know what to do with your money as soon as it is received. A duty must be allocated to each dollar. Then all you have to do is stick to your plan. For example, if you still have $100 in your account after spending your money, assign each of those dollars to a job. For example, you might determine that this month you only want to spend $50 on dining out, $20 on new books, and $30 on new exercise equipment. A few of those expenses, as well as the money you wish to set aside for gifts and routine car or house repairs, should be split by the 12 months of the year once a year. You plan to set aside money each month to cover those unexpected expenses. When the bills are due, you'll already have the funds and will also be able to prevent creating further debt or expenses. Finally, the 2410 Auto Loan Guideline clarifies how you should spend your funds when buying a car. It implies that you should put down a 20% down payment to avoid owing more than the automobile is worth if the loan is less than 4 years. This will help you pay the least amount of interest throughout your loan's life. Finally, your monthly car cost should not exceed 10% of your monthly gross income. If you have a particular investment outcome in mind, you might like to consider setting up multiple accounts. Of course, this is dependent on where you live and the laws in your nation. However, in some circumstances, you may be able to set up an account without needing to pay fees. In that case, setting up automatic payments and creating a different account for that objective may be a smart option. When my fiance and I were preparing for our wedding, a particular amount from each paycheck went into that account, and we knew the money was safe. That's precisely what we did. We opened a new bank account, made a monthly automatic transfer, and never requested a credit or debit card to go along with it, unless I was shifting money across to pay vendors, caterers, and etc. The money became virtually inaccessible for monthly expenses. Unfortunately, personal finance isn't only about saving, budgeting, and cost cutting. It's also crucial to plan for taxes. Again, this is entirely dependent on where you live, but you should be able to locate a tax schedule for your country on the internet. You should also organize and manage the invoices that you can use to offset your tax bill, in addition to organizing and tracking your expenses in light of your tax bill. Also, keep track of when your payments are due. You can use a variety of software as well as a paper planner for this. If you can pay all of your payments the day of the month, for example, if you have 10 debts to pay and they are spaced out across the monthly calendar, you can arrange the 10 bills to be paid on the deadline of the first one. You're paying everything on time, even if you're expecting your payments, and you won't have to bother about it for a month. Furthermore, paying all your payments on the same day and completing or saving transactions on the same day ensures that whatever money remains on your wallet is for your expenses, making it far easier to handle till the end of the month. And finally, make regular financial housekeeping a habit. Managing the family's financial budget should be treated as any other housekeeping. One person should be considered as the main responsible, but the members of the family should be aware and ready to help with the financial tracking. The responsibility can shift from one person to another when you see fit, but make sure that it is clear who has the main responsibility that week or month. This shift in mentality could help you reclaim some control over your money. The housekeeping should involve checking your accounts, ensuring payments are arriving on time, filing invoices and bills, ensuring that you're paying your bills, putting away money for savings, and making further payments in advance to stay on top of things. And that concludes our video for today. Hope you find it helpful. If you want to elevate your life from the one that you have to the one that you deserve, be sure to click the subscribe button right now. This has been the one and only Wealthmatic, and we will see you on our next video.